All right, everyone. Thanks a lot for hanging out with us. This is our regular Thursday night. This is the Quigley Insider, where William Quigley gives us his inside views of what's going on around the world. His deep knowledge and research is totally worth it. Besides working at Disney, he helped create a company called Clearstone Ventures, and they invest in so many incredible startups. He was also at a company called Idea Lab, and Idea Lab was a factory for ideas that were funded by, I believe, Bill Joy was the guy that really got in there, right?
Bill,
No, not Bill Joy. Come on.
If you're talking about Bill Gross.
Bill Gross. Sorry, Bill Gross.
Founder.
Yes.
Bill was the founder.
Bill, yeah. Who I got to get on. I've been chatting with him. He sporadically answers email.
Yeah, that he hasn't changed.
No, is he bad back then too?
Of course. Yeah, Bill Gross was. He was hyper, you know. He started about one company a week for 5 years.
Wow. And how many of those companies do you think turned into something huge?
24 went public.
That's incredible.
Wow. I mean, he created the concept of ranking searches by how much you pay. That was $13 billion. That was GoTo.com, which got acquired by Yahoo.
Yeah, that's right. So
yeah, no, he's
I do want to touch upon something that everyone has to understand. And I'm not just saying this because he's one of my best friends, and I'm being very, very honest. In the space of fintech crypto, William is probably one of the brightest minds, period, hands down. Now, something we don't do at Metal, other than this space, this is a place where we talk about geopolitics. Now, we're not talking about Democrat, Republican. We're not talking about anything like that. But where politics of governments are involved with other politics of governments. And this is important. And I want you to realize that everyone has opinions, but what I really recognize from William is he has deep research and he has an entire team around him that gives him facts to develop an opinion towards something. So this is not emotional. This is logical and fact-based. Everything he says is fact-based. And that's really important. So, and it's a free-for-all. This is a free-for-all conversation that takes place here. And what I'd like to do is this. I want to open up the chat area so we can actually go through the questions that you're going to have. But William, let's start with something right now, and that is more unemployment numbers. I guess they were expected. The market handled it properly. We're at now 15 million people unemployed, 15 to 16 million. I think the number's probably a lot higher than that. These are people that have filed for unemployment. Markets seem to embrace it without an issue. What's your thought?
My thought is that that's called, what are the expectations? Markets trade on the expectations, not on the news itself.
And we know these numbers are going to go up. We know it's going to, depending upon how long this lasts, we will see this continue to go up because other sectors are just going to be closing down soon.
Well, keep in mind a couple of things. So every number you get is a flash number. And a flash number means they haven't fixed the footing errors. They haven't gotten all the data. When it comes to GDP and jobs information, we usually do 2 revisions. We'll do a revision in a couple of months, and then another revision in 6 months, and then that'll be the final. So you usually get 3 numbers, right? Mm-hmm. But you're directionally pretty close, but you know, you could be off. In this case, it could be 14 million or not 16, or it could be 20. I actually think the error this time around is going to be substantial. And that's because if you look at places like New York, you cannot log on to the unemployment website. And I happen to know that because a friend of mine is unemployed and in New York, and he said, hey, I think if I log on at like 3:30 in the morning or 4 in the morning, I can get it, you know, but that would be like midnight for you and you're up. Would you mind trying? And so I got on, which is cool. I filled out 9 pages. What? I had 1 more page to fill out and the fucking thing crashed. So I got to tell you, Ken, this pissed me off because, my website handles, I don't know, we can easily handle 2 million concurrents, right? We got 100 guys in this company, but 2 million concurrents, not a problem. Couple of 100,000 concurrents, not a problem. So why can't the city of New York and the state of New York, why can't those guys handle like 1 million? I mean, it's ridiculous.
I'll tell you why, William. That platform was built by the lowest bidder.
You're right. It was built by the lowest bidder. And I'm also sure that it has virtually no serious investment. But there's this system called, well, it used to be called elastic computing. Now it's called Amazon Web Services. And when more people come to your site, you buy more compute. I mean, give me a fucking break. So why is it that, and by the way, it's now been about 3 weeks. And I would say the vast majority of the people cannot log on. So, and by the way, they will not accept a mailed in form. So all you can't mail it in, you have to log on. So yeah, I think okay. There's several other cities like that. And as a result, I would say the unemployment numbers are still their guesses.
Maybe the platform's still encoded in Cobalt. And that's the problem also.
Well, you know what? I don't know if you recall, but when the first stimulus bill came out, which was a couple of weeks ago, Trump said, I would like to have the checks for unemployment for people to be funneled through the IRS, which can handle like 100 million people. And he said, but the states are telling me they would prefer that we do it through their systems. Well, their systems are 50 years old, right? So
they are in Cobalt, probably.
Oh, hell yeah. Hell yeah. I mean, yeah. I mean, I get a feeling, because I was looking around for servers on my VPN of New York, I get a feeling they have one broom closet with like 5 old racks that they bought maybe in the .com bust. It's really awful.
But it basically says, William, that you have to have a computer to file for unemployment.
That's very true. You have to have a computer and know how to use it. And by the way, I mean, if this guy hadn't given me his screenshots of his data, I would have, it's not obvious which box to check. And I speak English, So yeah, that it's pretty sad. The state of these systems are terrible.
Seems like there's a possible class action lawsuit there then.
Yeah, good luck.
Yeah, it's kind of like, I'm not sure if you ever noticed on Southwest, I don't think you fly Southwest, it's probably beneath you.
I love Southwest.
But when you get on the plane, you will notice that generally a immigrant labor, let's say a farmer, is in the middle seat. Is because they generally don't have a computer to log on to get one of those A's or B's, and they're automatically stuck with a C, and they're sitting in the middle seat because they couldn't log on.
That's true.
There's a lawsuit there too. I'm just saying, lawyers that are in there, if you're searching
now, what's crazy is they actually say on the website, I mean, there's 10 pages and it's like governmentese. It actually says on the website, using your computer or your cell phone. Trying to do this shit on your cell phone, I mean, I'd be very impressed.
All right.
So yeah, unemployment numbers I'd say are pretty much inaccurate at this point. I'd like to, if I may, Ken, show a couple of slides.
No, let's do it.
All right. Let me see. This one, I've just updated a little. I've shown this one before, but it's, and this is just quick. I just want to level set everybody. So let's see. I think that's it.
By the way, it's amazing how clear it is for a night sky in Miami by you. It's nice and bright.
They've got really big skylights outside my house.
Got it. Okay.
So guys, what you're looking at here, and just to keep in mind, I think the most important thing to focus on when you are an investor is the consensus. By consensus, what I mean is what is baked into the expectations. Because it doesn't matter if things are awful. It just matters if things are more awful than what people thought, right? So expectations. So coming into 2020, the expectation was GDP in the United States would grow at 2%. We'd end the year at 3,400 on the S&P. It was about 3,200 going in. So whatever, like kind of flat, 3.5 to 4% unemployment, $60 for a barrel of oil, and $15.50 for a price of gold. So obviously we got the 2% right. It's just a minus. Now keep one thing in mind, which you almost have to have two brains on when you look at this. The consensus estimate now, as of yesterday, for what the GDP growth in the U.S. will be for the full year is minus 2%. That takes into account a minus 37 or 35% GDP shrink in Q2, which means we are expecting explosive growth in Q3, Q4. If that doesn't happen, look out below. As of today, people are saying, I think the S&P will be about 2,800, which is almost where it is right now. So I say the market's optimistic because as the effects of the recession come in and earnings really do go down a lot, I think 2,800 might be optimistic, but who knows? Unemployment rate, they're thinking it'll peak at about 15% and then get back to about 7%. We can talk a lot about how quickly you get back, but one thing I think we all know, after a company has fired people and gone through the trauma of that, they hire back very cautiously. So you ain't just going to see everybody get hired back. And one of the scary things about that is part of the reason for that is they're going to figure out they don't need to have everybody come back. That's the really scary thing. I think there were a lot of companies that did not need as many people as they had. And of course, price of oil, catastrophic decline, down over 50%. And then, gold, for me anyway, kind of surprising. It's only up 10% given how bad things are. So,
by the way, real quick on oil, we know that Russia and Saudi Arabia did come together on something today, I believe.
The market didn't really care, though.
Yeah, it didn't care.
The market doesn't believe it. The Saudis said, and the Russians said, we'll cut production. I think there's about 85 million barrels extracted.
10 million barrels, I think they're going to cut by.
And they're going to cut 10, right?
Yeah, 10 million barrels.
Yeah, but no one believes it. So I think that's the reason the market didn't do anything. Look, at the thing to keep in mind is, had oil collapsed as it has, going from $50 to, went down to 23. Now it's about 30. Had it collapsed, and that was the only economic news of the day so far in 2020, it might put us in a recession anyway. The price of oil is strangely like, it works in a way where if the price of oil skyrockets, it doesn't hurt the economies that much. It's not that big of a deal. But when the price of oil collapses, shit hits the fan. It's sort of screwed. You would think, oil's cheap, therefore we'll drive more, but you actually don't drive more, most people.
It's interesting. So, in 1929, oil was at $2.46 a barrel, $2.46. Within 5 years, it went down to 29 cents.
Wow.
Okay? And of course, that's when the Great Recession. And that's when most people don't realize the Great Recession, our unemployment numbers were above 10%.
Yeah.
10 years. For 10 years. So
you're talking about the Great Depression.
I'm sorry, Great Depression. Great Depression. So when people are saying we're going through a depression, it takes a lot longer to go through a depression than a recession.
No, I personally, also, when we went through the Great Depression, the U.S. federal government had only been collecting taxes, very modestly taxes, for about 20 years, okay? So it had only just begun collecting taxes. So, U.S. government, the federal government was very small. It wasn't a force to actually fix things. We had that $2 trillion stimulus a couple of weeks ago. Now we have another $2 trillion. announced today. So it's just endless printing.
But explain during the recession of 2008, it cost us $10 trillion to get out of that, right?
Yeah, I mean, that's a way to look at it, right? It's like, how much did the United States balance sheet, it increase? And it was about 8 trillion. And then when you add in all the stimulus and everything else, it was about 10 trillion. And what happened as a result of that? US dollar was even stronger. That's the thing we were talking about a few weeks ago, Ken. It is this unbelievably blessed position that the United States finds itself in. The US dollar holds its value despite how hard we try to debase it. So relative to all the other currencies of the world, the US dollar is stronger than it was prior to the crisis. I mean, even though we are going to, without question, probably get another 8 to 10 trillion dollars in debt. And keep in mind, we're paying very low interest rates on this, less than 1%. You could argue when your interest rate is less than 1%, borrow everything you can. So, and that is probably what we're going to do. But you would have thought, as the government did that the price of gold would have skyrocketed.
And it hasn't.
Gold's up 10% for the year.
And how's Bitcoin? Bitcoin's doing pretty good lately.
Oh yeah. Well, why don't I show you? So I haven't been looking too much at global averages. I've been looking mostly at U.S. stuff, except for gold and Bitcoin. But here's a chart that I think is quite telling. Okay, so S&P 500. You guys all know what that is, right? Biggest businesses in America. By the way, we were down here, our low, 34% off the high. That's pretty bad. A bear market is when you're declining 20%. And now, after some stimulus and whatnot, we're down 16%. So pretty good. The Russell 2000, this is what we keep hearing about. This is small business. Now, by the way, small business that's big enough to be public, right? So the 2,000 biggest small companies. And look at that, off almost 41% from its high. And right now, still down 29%. So it's sucking wind. Gold down or up 10%. I would have thought it would have been up more. Oil is really the one that you just feel bad for. I mean, mine is 57%. So keep in mind, for most oil producers, they can't extract a barrel of oil for under like $35. So right now it's at 26 bucks. So they lose money as they extract. And then you got Bitcoin. So it was up for the first, 2 months of the year. It was up almost 40%. And then it got nailed. It went down 33%, about as much as the S&P. But where is it now? It's year to date up 5%. And I think that's very impressive for everything you hear about Bitcoin not having any underlying value, not being a store of value. People certainly seem to have a lot of faith in it. So if you were exposed exclusively to Bitcoin at the beginning of this year, you'd be up 5% on an annualized basis. That would be 20%. You'd be like, wow, I'm doing fine. So I've been pretty impressed with the way Bitcoin's been working through this crisis.
And you still feel the S&P is a good just bet long term, bet on America?
I absolutely do. Now, the reason is very simple, though. So the S&P is the 500 biggest companies in America, right? I mean, if the 500 biggest companies in America go away, then America goes away. So my view isn't so much that the S&P 500 can never go down, it'll always be going up. It's more like, well, you got bigger problems if that thing, goes away, because it would mean kind of America goes away. So where else are you going to put your money? So I love the S&P 500, which went up about 500%, 600% from the lows of the financial crisis.
So let's get some questions. You have a question, please put them inside the chat. Unfortunately, I need to know your name and we need to see your face. So I'm going to let you actually pop on and we could say hi to you. So the first person, I don't know who you are. It says Xslip. And Xslip, it sounds like just it's like a hacker name. So Xslip, I'm going to unmute you. What's your name?
It's Mark Beignet.
Oh, Mark, let's see you.
I thought you could already.
Mark?
I can see.
There you are. All right. Hey, Mark. So what is your question for William?
Well, we've been talking about China doing the deals with the back end and to get around the dollar from being the world currency. And in this environment, has that gone away or is that going to keep happening?
Well, yeah. So U.S. being the reserve currency, like I said, it's a great privilege when you can issue debt that you pay back with money that you print in your printing press. I mean, can never default, right? So I would say if the US dollar had really suffered and declined as a result of all this debasing of our currency, then you'd say maybe China's got a chance. China, well, one, it's pegged to the US dollar, right? I forget the official peg, but it's like 6.3 RMB to the dollar or something, but it's pegged. So what's the real exchange rate? I don't know. Maybe it would be 5, 4.5. No one really knows. But if you were going to unpeg it, now would be the time to unpeg it, because
they've changed it too. They can do that.
Oh, absolutely, but they won't, I believe. I don't think they have the balls to do it. Remember, what would happen to the, 40% of the Chinese economy that makes money by exporting to Europe and the US if their prices went up 75%?
Plus, they own a lot of our debt.
Yeah, they have no other place to put it. So yeah, you've got no place to put it. You can't just put $1 trillion a quarter into the stock market. It doesn't work that way. So yeah, they have to hold the debt. But yeah, so I thought a couple of weeks ago, wow, if you were ever going to unpeg to the dollar, if you were China, and then if you ever were going to invade Taiwan, if you ever were going to do anything that was like really bold, do it when your adversary is crippled. But I don't see China doing anything like that at the moment. And as a result, I don't think China really wants to be the reserve currency. Remember, being the reserve currency comes with a very steep requirement. You've got to then flex your muscles militarily. So you need a global fleet to enforce rules. I just don't see China wanting to do that.
There you go. Thanks a lot, Mark. Let's go over to another Mark. Let's go to Griff. Hey, Griff. Where is Griff? It's great seeing all you guys in here, by the way. There's Griff. Hey, Griff.
Sorry, I was eating my dinner.
Hey, buddy.
Hey, how are you? Great to see you, William. Thanks for doing these. I love when you do these. I actually typed a question, but I have a bigger question. So the first little question was liquidity in Bitcoin. If people flee to it for safety, and suddenly there's a lot of money being invested in it, if there's immediacy requirement for liquidity, is it liquid? I mean, so without market makers, and how does that work in this market? That's number one. But number two, I want to ask about. You just kind of started hitting on it with other leaders feeling alienated with our America First policy right now. Does that put us in a vulnerability given our weakened stance? And if there was going to be a run at the U.S., would now be the time to do it?
Well, on the second question first, I would just say, look, at every country's managing its crises. From what I can see, the way you vote on your confidence in a country is the currency, right? That's it. That's all you got to look at. Just look at its currency. relative to every other currency. And I mean, the US dollar hasn't skyrocketed over the yen or the Australian dollar or the euro, but it's, last I looked, it was above or holding its own with this massive stimulus that we're doing. So yeah, I mean, you hear politicians talk, but guys in the market just look at the price that people are assigning the currency, and the US dollar is holding up, which means people want dollars. And as I said, I think last Saturday, I found this very interesting. Carnival Cruise Line. So if you had to pick like the worst possible sector in the markets, it's hard to come up with a worse one than the cruise industry, right? So Carnival Cruise Lines, did a bond offering last 2 weeks ago. They were trying to raise $1 billion. They upped it to $4 billion because the demand was so high. They ultimately had $17 billion of demand for these bonds. Now they did pay 11.5% interest rate, which is about 11.5% more than a US government bond. So, but the US government bond isn't going to go out of business. But what I found really intriguing was this. They were I think about 50% of that bond was going to be paid back in euros. And then they thought, you know what if we dial that down and we say only 30% will be paid in euros and the rest will be paid in dollars. And the demand went from 4 billion to 17 billion. Wow. I mean, people want dollars. And by the way, these bonds, the maturity dates are 5 years to 40 years. So that tells you people are thinking not about tomorrow or next year. They're thinking about 2 years out. And I would say the same to you guys. 2020 is a freaking write-off. And you just have to think about it as if somebody said you're buying this rental property, but all the rent for this year got lost. Well, that wouldn't make it worthless. You would just say, okay, well, don't have rent for this year, but I will have rent forever after. So I think that's how people are looking at these companies, the big companies. The small companies, they may not be around. And I think a lot of economists are worried about that. I was listening to Wolfgang Puck talk a week ago, and I should know this, but I didn't. He said, hey, 12% of the US population, working population, works for restaurants, which are obviously terribly hit. On the question of Bitcoin and liquidity, the liquidity of Bitcoin is unbelievable. Like, yes, if everybody tried to take their Bitcoin and everybody tried to sell it at once, well, of course, but that would happen to a stock too. It would plummet. So on March 12th and 13th, Bitcoin went from about 8,000 to 4,000, right? So it dropped almost 50%. Immediately jumped back to about 5,500, by the way. But the reason it fell so fast was because unlike before, in the last year, everyone is doing derivatives and options and futures for Bitcoin. So as people's margin accounts were being destroyed, they were seizing their Bitcoin and selling it, and it became like a scramble. But where did it stop? It stopped right at the price it costs to mine a Bitcoin. And so once it hit there, the Bitcoin miner said, well, if it drops below the price to mine a Bitcoin, we'll just buy that Bitcoin because it's cheaper for us to do that. And that's where it stopped, and then it bounced back. The liquidity of Bitcoin is amazing. And also remember, Bitcoin trades 24/7. And nowadays, guys, it's astounding.
Are you still meeting guys in parking lots with flash drives and suitcases of money?
That I think is probably no longer what people are doing. Most of the major exchanges have fiat intake and fiat withdrawals. But the big action these days are the options markets. And so here's an interesting fact. So if you own a Bitcoin and you want to give somebody the right to buy that Bitcoin from you on March 29th, and actually they buy whatever it's worth above $7,500. That's called the strike price. So that's a call option with an expiration date of May 29th at a strike price of 7,500. So right now you'll get paid $1,000 for that. So people think that the price of Bitcoin is not only going to be 7,500, but 1,000 more, 8,500 at the end of March or May. I don't know if that's the case, but the markets, that's a very rich price for a call option. And a lot of the action today in crypto is in the derivative markets. It's crypto was almost made for derivative markets because the derivative markets like volatility. When people say Bitcoin is volatile, what a lot of people don't understand is, but that's the attraction of it. Because it's volatile, the options are really, really expensive and you can make a lot of money. For instance, if you took whatever the price of Bitcoin is today, let's say 7,500, and you sold, you gave people a right to buy it from you at 7,500 for the next month. And then whatever price it is at the next month, if it didn't get triggered, you do that again. You string that together, right? A string of call options. You would make one entire extra Bitcoin for every Bitcoin you hold after 12 months. Usually when you string those options together in a stock, you'll make like 8 or 9% for the year. So these options are incredibly richly priced because Bitcoin does this.
I really appreciate you answering that question for me. And I'm not going to monopolize this call, but I'd want to throw out for another time Valorant. Have you been following the release of Valorant?
Not at all.
So, okay. So CSGO is the #1 skin selling game of all time, hands down without question.
Yeah.
Riot Games copied Valve's game completely and released a game 3 days ago called Valorant. It's out in beta right now, pre-release, invitation only. Huge reviews. People are loving it. Skin sales, skin designs, pro leagues, so many business opportunities and esports are going to come out of this. And it's something maybe, Ken, for a call later, we could talk about as a group, but huge business opportunities, billions of dollars are going to be coming through this game alone. And now I'm done. Thank you.
The only problem with Riot is they don't allow skins to be traded, so you can't make money in the secondary market.
That's a big problem.
That is a problem.
Yeah.
Thank you.
Ken, let me go show these guys one other screen that I was looking at. It actually came from something you sent out a couple of weeks ago, or maybe a week ago. Just wasn't sorted right. Give me a second here.
By the way, the weather looks great there again. I just wanted to just say that.
You know what's amazing? The weather never changes.
It just never changes, nor does the sunlight.
Now, don't let this guy scare you.
It's good to see Scott Page on this call and Nolan on this call. It's good to see you guys.
Let me try it again. Share Sheen. All right, screen share. Is that going? Yeah. Okay. So, like I said, don't let this scare you too much.
Yeah, this is why I sent you last week.
Yeah. Well, you sent me this, which didn't do anything for me. But so this, just to give you guys a sense, a lot of numbers here, but just this graph, this chart is just 30 travel companies that Ken sent me, which I just then sorted by decline in market cap. It is pretty astounding. You know, when your company drops 76% in value, that's pretty bad. But of the, no surprise, of the top 6, right, that declined, the top 5 were 5 of those 6 were cruise ships. Which just astounding levels, right? Minus 70%. Let's go here. This has got a lot of data, but I thought it was pretty interesting. So these travel companies, from basically their high, which was February 19th, to their low, which was March 24th or thereabouts, the median decline was 50%. That's pretty freaking awful. What I find interesting, though, is while the rest of the market has gone up about 20% from its low, nothing really in the travel companies yet. You've got some like Marriott, they're up 15%. You got some like American Airlines, off 11%, even from its low. So that's pretty bad. The other thing I think it's kind of interesting is if you take these top travel companies, and I think these are basically the top 30 in the United States, really 3 of them represent half the market cap. These guys right here. Walt Disney, Booking.com, and Marriott. I didn't realize how big Booking.com was. So this sort of says to me, if you were going to go back in, probably you'd want to go back into those 3 guys because the market loves critical mass. I also thought it was kind of interesting that like Disney and Booking.com lost almost as much market cap during the decline as all the other travel companies combined. But it really just shows those are the major travel companies. Actually, Carnival too. As I said to you guys a few times, I think Carnival's not a bad buy. And maybe what you do is you buy the bonds if you don't want to buy the stocks. By the way, I might have said this in the past, but it's worth repeating. A lot of people, right up into the beginning of this financial crisis, kept repeating this thing, and that is the Federal Reserve has one tool in its toolkit, and that is lowering interest rates. And Ben Bernanke, the former Federal Reserve chairman, wrote a white paper in 2002, and he delivered it to the Japanese cabinet. And he said to them, he was an academic, and he said, you know, interest rates, that's nothing. Let me tell you the other 300 things you can do to manipulate the money supply and goose your economic activity. And no one really paid attention to that white paper. You can Google it, just do Ben Bernanke 2002. It's really interesting until the financial crisis. Now, of all the things we could do, we did like 2 of his top 10 things. Like number 4 or 5 was go buy stocks outright. Now, when you're the US government buying stocks, I mean, when a big whale comes in and buys some Bitcoin, the price goes up, 10%. The US government can pretty much print what it wants. If the US government said, we're going to put $2 trillion into the stock market, for a lot of reasons that would scare me, but in the short term, the market might double. So what happened today? US government, our Federal Reserve said, hey, we said we were going to buy back treasuries. Then we're going to go buy back mortgage-backed securities. We might even buy AAA companies, their stock. Today, they said, we're going to buy junk bonds. Now, the reason they're going to buy junk bonds is because the people who issue junk bonds are the Russell 2000 companies that have collapsed. So that junk bond bet, it's being priced in now, but it's a very interesting bet. They are not going to let those companies go bankrupt. No one is too small to fail anymore.
Yeah, but that's a smart way of doing it. A very smart way of doing it by injecting it into the market.
Yeah,
to pump the market up.
Yes, but Ken, I'd say this to the purists, and I guess I used to be one. That was a demarcation you did not cross. The Federal Reserve did not screw around with the stock market. It is too easy to manipulate. Way too easy to manipulate that. But we're doing it. The Federal Reserve is going to buy junk bonds. Like I said, just a couple of weeks ago, guys, CNBC, I'm watching it. These big prognosticators, whoever else was like, you guys don't know anything. They're like, yeah, Fed doesn't have any other things it can do. It's like, dude, Ben Bernanke already discussed this. And so at this point, you probably will see the federal government going into these travel stocks. They will go into their bonds. Who knows? But the issue, of course, is when they decide to leave. And as I mentioned, there's a reason why the Chinese buy U.S. government debt. The U.S. government debt market is the biggest market in the world. And you can get in and out with a lot of money and you don't upset the market. The Chinese can't go invest in the U.S. stock market. It's too much money. You just couldn't do it practically. And so they wouldn't mind investing in oil, but you know, the oil market's collapsed, and who knows when that'll come back.
Okay.
So this is going to be something to watch closely.
All right, let's go to Harak. Harak, you have a question for William?
Yeah, hi, William. Thank you for taking the time today. I think you already touched on a lot of it. I was just going to bring up the kind of the hyperinflation model of the U.S. Printing so many dollars, but yet you did touch on the fact that it's having the opposite effect. And you also had said something that stuck out to me a few weeks ago. You're like, that used to be the case. That you would print dollars and it would cause hyperinflation, and now we're kind of in this backwards world of where it's having the opposite effect. So can you touch on what that means?
All I can say is, and I would say to all you guys, you know, when you look at these economists and their econometric models, you listen to the transcripts every 6 weeks or 12 weeks. They publish these records of the Federal Reserve governors talking. And it sounds like it's a foreign language, right? I mean, the words they're using are really hard to understand. But they, at the end of the day, I feel a little bit like the emperor has no clothes, because the models, the economic models, would have predicted in 2008 that we would be going into, if not hyperinflation, like double-digit inflation for years to come. And what happened? We were in deflationary time period for a while, which is probably what we'll be in very soon here, unless it's, you know, toilet paper. We will be in a deflationary time scale. So what it means is, I'm no economic thinker, but I do know it means your damn models for the second time have been tested, market tested, and they're bullshit. They just don't work. And what annoys me is the degree to which the political class and the media listen to these economic thinkers. But guys, their models don't actually bear out, which means if Wall Street's looking at those models, you could do better than Wall Street by not looking at those models. But I think, Goldman Sachs said last week, an analyst at Goldman Sachs said she believed we would be in a near zero inflationary environment for the next 10 years. Now, who knows? I can't think that long, but basically, no one's thinking there's going to be any inflation.
Wow. Okay, let's go over to Dave Winston, who's over in Washington, D.C. Dave, I am looking for you so I can unmute you, unless you can unmute yourself before I get to you.
I'm not going to show you myself. Sorry, I look too horrible at this point. Everybody would flee the meeting. Bill, good to see you. Listen, a quick question for you. Given what occurred in terms of the stimulus that was just passed, your thoughts, should there be another one? And if you think there should be one, what would you want to see in it?
Yeah, man, I would do 10 more. And I'll tell you why. If I said to you, here is a little, like, you know, there's a little jar, and every time you reach in it, it automatically refills. I mean, fuck, keep reaching in. Every time we announce we're going to do a multi-100 billion, now $1 trillion stimulus, the dollar strengthens against other currencies, and our interest rate we need to charge for that goes down every fucking time. So it's yes, I know there's somebody saying, but there will come a time, and I agree, there will come a time. But the dumb move, if every time you empty your bank account, the next morning it's full, the dumb move would be to stop emptying your bank account. Right? You just keep doing it. In fact, I really loved, I think it's bipartisan supported, I really love, if there was ever a time to invest in infrastructure, it's when the borrowers pay you back interest rates. We're almost at zero or negative, right? So why not? Now, the only reason you wouldn't do that is if you thought the money was going to be wasted. But I hope it's not. But if it's not going to be wasted, yes, absolutely do it. And also, So you have to do the Fed talked about this today, Jerome Powell. You need another of those $1,200 thingies because that would only last people like a month, and this is going to be longer. You also need the small business loans. That was a drop in the bucket, right? Like whatever, 365 billion. They're adding another like 450 billion. By the way, I have some small businesses that have applied or tried to apply. It's a pain in the ass. And I know it was really, really done really fast, but there are literally things in those SBA loans where what things you're inputting are contradictory to what you put in other places. It's the forms need to be revised a little. The hope that we would have loans being originated and the money being deposited into the pockets of the businesses in 30 days, I think is a fantasy, unfortunately.
Thank you, David. Thank you, David. Let's go to AJ. AJ, I'm unmuting you. That's Bernardo. I didn't want to unmute Bernardo. AJ, you are unmuted. What's your question for William? Wait, AJ.
Oh,
there you are.
hey, William.
Hey.
This is fascinating stuff. I just was wondering, do you think, and in your just crystal ball, the lows we saw in early March, is that likely to happen again? Or looking at those stocks that like Disney and Marriott that still haven't bounced back are kind of the best bet now? Or do you think there's a chance maybe the S&P might take another hit with all the unemployment? I know there's no answer.
Page 2 of my $9.95 booklet tells you the secret. Just kidding.
Yeah.
So what I'm going to show you is this. I don't know, but it's funny. I listen to my traders, and there's one guy who is angry that the S&P has not fallen to 1,600. It's at whatever, 2,700. And he's the smartest of us, and his math is the best, but it doesn't work. I'm like, you're smart, but you've been wrong. So we're the market. The mean like S&P 500 PE ratio is about 15, right? And let me just show you guys this because it's easier just to show you, and then you can just I can very quickly just explain it.
Right. You were mentioning that last Saturday, right? You were saying it should get to 14 or something like that?
I don't think
It should get to 14, exactly. So guys, here's a great chart for all of you. Okay, so just a little bigger maybe, so you can see a little easier, hopefully. Okay, so this is the S&P price earnings ratio. It's the the earnings of the Fortune, the S&P 500 companies. If you took 500 of those companies, all 500 companies, and you took like how much they're going to make, divided it by the value of those stocks, you would get a ratio that is right now at 20.99. Now I want to show you here. The median, meaning half the time it's above that and half the time it's below, is 14.82. The mean, which you can kind of think of as the average, is 16. So what the hell? We're supposed to be in this terrible economic malaise, depression, whatever. And as you can see, this little red dot seems to be above most of those. So logic would tell you that the S&P 500 is overvalued, and we are going to decline by at least 25%. So to go from 20 to 15. So if we're at, well, when we're at 2,200, that would have been like 600, but at 2,800, 25% is what? That's 2,100. So you would think it would be between 2,000 and 2,100, and yet I don't have the balls to bet that way because I kind of feel like the market has just said, literally, we are going to ignore 2020. And if the market does that, then you just sail right through it.
I love it. Thanks, AJ. Appreciate it. What time are you?
By the way, I want to say one more thing about this, and this is maybe a little too geeky-ish, but I want to say it anyway. In generally accepted accounting principles, GAAP, and all US financial statements are GAAP, so they conform with a standard of how you report income and losses. There is this thing you're never supposed to use except once in a while, and it's called extraordinary items. And extraordinary items are things that the US SEC says you don't have to put in your income statement, like in the regular part. You get to bury it because it's extraordinary, meaning it happens once in a blue moon, and if you put it there, it's going to fuck things up. For instance, if you were a big company and you sold your corporate headquarters, and for some reason, you know, it doubled your income that year, the SEC would say, you don't sell your corporate headquarters very often. So in order for us to be able to compare one year over another with your company, can you just stick that down below? So that was all good and fine until like 10 years ago, where some guys thought, well, what if we have bad extraordinary items? And what if they're not even that extraordinary? And we just start burying them. And Wall Street went along with it. So we're doing a big layoff, so we have severances. Yeah, but what if your industry does layoffs every 4 years, right? That's not extraordinary. So I've been wondering, how is the SEC going to treat the coronavirus? And I bet you they're going to allow everybody to call it an extraordinary item. So it's literally just going to disappear. It's going to be like the impact never happened. I'm waiting to see, but I bet that is what happens.
All right. Hey, AJ, thanks a lot. I really appreciate it. Hey, William, since you did say something geeky, I want to touch upon something unrelated to what we talked about, but I do want to touch about it, and I want more from the data and the experts you've talked to. I have been seeing this thing floating around the internet, and it's turned into now some serious damage to the telcos. And that is, somehow somebody has said 5G is linked to Corona. Have you seen this?
Yeah, yeah, Ken, I've seen it. I think everybody has seen that one.
And you and I have laughed.
Yeah.
Because if you go throughout, even back to the Spanish flu, they said the Spanish flu and wireless, radio waves were linked to the Spanish flu. 3G was linked to, what was the swine flu? It seems like there's always this conspiracy. Now, out in the UK, the 4 major telcos, their 5G antennas are getting burnt down and taken down by people because they think 5G is causing Corona. You've heard about this then, right?
Yeah. And you're right. I saw that one. I don't know if you guys saw it. Well, most of you guys probably know that 5G, it's the new global telco standard, really high data rates, but the data rates are, the radio frequency is so high, meaning the wavelengths are so low, they almost require line of sight to hop between stations. And as a result, you need shit tons of repeaters everywhere, including maybe even in the building. Mm-hmm. But you get super high data rates. Now, it's non-ionizing radiation. It's like microwaves. But there are still people who believe microwave oven gives you radiation. So, I saw that one. I mean, if there was ever an area of fake news, that's it. Where they were like, radio was, I think it was,
Spanish flu.
Spanish flu was 1918, right?
Right.
It said, radio introduced. And look at that, there's a Spanish flu. Well, radio waves were around when the universe was formed. But that being said, it's crazy with social media, because as you've seen, prominent and uneducated people in social media are saying, hey, this 5G thing could be what's causing this coronavirus. I always feel like the origin of these things, there's somebody smart who's making money at it, but I don't know who that is. So right now, 5G is not going to slow down. But as you saw, the UK is asking social media companies to start putting like PSAs out.
Saying, you know what Brian is saying? Hey, Brian, why don't you pop yourself up? I don't know which Brian it is. Here, let me unmute you. Brian, who is that? Brian who? Brian. Let's see, you guys. Come on, Brian. You are unmuted. Let me see you.
Cool. What's up, guys?
Brian, now, do you have scientific proof? Because I can't find anything. I find this, what you just said, in all the chemtrails, those are the people who are talking about chemtrails are talking about what you're talking about.
So don't even worry about that. This is the thing, is that what's happening in the media right now is that there's a lot of this cross, calling 5G people flat earthers and calling the chemtrail people 5G. It's ridiculous. Like the science is actually very direct. There's over 20,000 studies proving that wireless radiation, so it's electromagnetic radiation, causes biological harm in different ways.
Right next to the antenna, right next to it. They've done it with plants. But it has to be
with plants, they've done it with people, they've done it with rats.
But it has to be right next to it. That's why if your cell phone is next to your balls, you're going to get testicular cancer.
It depends on the effective radiated power, which is what happens with 5G and why they're increasing all the electrical infrastructure for 5G. It requires a lot more power. So it's a lot more power to send radiation.
From the phone, by the way, not the antenna. The phone itself.
The phone is both a sender and a receiver.
Right, but I'm saying the phone.
This is a microwave oven, right? It's microwave radiation.
Yeah, I guess here's what I would say. Like, we're not, obviously anyone on this call is not going to be a electrical engineering researcher to go look at this, but and I certainly am not saying I trust governments to do the right thing, but I will say we got a pretty good experiment going on in the last 30 years, a global infrastructure of telecom and cellular communications, and the life expectancies are going up. So I'm not particularly worried by it.
There's a lot of links to other sorts of issues, psychological issues and things like this, That's the thing.
Yeah.
And the science is backed, and when they're saying that there's no evidence, this is a very common
no, but I've been reading, but Brian, we're really driven, William and I are driven by real scientific, not, hey, this is where it's going, but yeah. I remember 3G issue, and so does William. We talked about this. Ericsson, Nokia, and all these companies were getting bashed saying how dangerous 3G is. The same people that were saying how dangerous 3G are the same ones that are doing the same 5G thing. Same people, by the way. The same people are in the studies. Okay? They said it cooked eggs. If you put two phones together and you put an egg right there, it will cook it, and the damage is going to do to your brain. The same people are there.
Yeah.
And the problem is, they might be smarter than the average, but this other people that are below the average, they're listening to them and they're reacting in a really dangerous, hostile way.
Well, and this is the thing, is that the message is not being consciously given on either side. And I agree with you on that. The whole 5G conspiracy thing about it, that's not the right way to talk about it. Sorry, that's me.
That's okay.
I think that, Ken, I think that's enough on the 5G thing. I mean, it's like, we're not going to resolve anything there.
Yeah, but there's 20,000 studies, guys. The science
is
Do me
a favor. I'm not kidding. Put them in the portal. Like Mark Griff is asking for. People want to see the real scientific studies. So if there's all these studies, please put them in the portal. And if anything, I'll create a dialogue on this, because I've been having discussions with other people from Nokia and Ericsson about this, and they have done this for the last 4 years. And even in Korea, SK Telecom, the same thing, they've been doing the studies, and they can't see this direct correlation. The telecoms can't.
Jump in, baby. We're going to do it.
Yeah, I appreciate it. Thank you so much, Brian.
Yeah,
hey, William, what I love about you, William, is we have not maxed you out for Saturday. And I know Saturday might be 2 days away. You have no concept of what you're going to talk about on Saturday, do you?
Other than something to do with what happens the next 2 days. Yeah.
And if there was any other coin than Bitcoin on the crypto side, what would you put, a few dollars into?
Between EOS and Ethereum, both have a lot of value. I mean, I'm a big critic of both for various reasons, but on the other hand, at the current prices, they offer some value. Bitcoin can't do what Ethereum and EOS does, right? And when people say Bitcoin has no value or crypto has no value, you guys have heard me talk about this a lot, but like Tether, which is a derivative of US dollar, is trades about $5 trillion annually now. And there's no way possible on planet Earth to send somebody a dollar instantly anywhere in the world, with no counterparty risk, no recourse, other than Tether. So that's valuable because the global economy is $80 trillion and 25 trillion of that is cross-border exchange, which is why Tether trades $4 trillion annually. So sadly, Mark Zuckerberg was totally incompetent when he was trying to defend Libra coin, their stable coin, in front of Congress. It sounded like he had been given some tips from the PR person about what to say. He blew that, but stable coins magnificently valuable for doing commerce. And then people like the ability to place bets, and if they're right on their predictions about something, to win. It's a big business. That's what drives the stock market. And crypto is very, very well designed for that because there's no counterparty risk. Once somebody sends you to crypto, they can't go and reverse the charge. So for bets with people you don't know anywhere in the world, using a smart contract and a crypto, there's nothing better. And I personally think that would justify maybe $2 trillion market cap for crypto overall. Right now, it's got like a 200 billion market cap. So I think it's got a long way to go. Every single month, I see new innovations around crypto, decentralized finance being a great one. And as I mentioned, the derivatives markets are huge for cryptos.
Which we'll touch upon later on. Last question, it's a yes or no. Did Carol Baskin kill her husband?
Oh, you're the expert on that, buddy.
Hey, William, thanks a lot for hanging out with us. And it's always an honor to have you part of the group. William Quigley, he's been a metal member for almost a decade and a half.
When I get back to LA from Miami, Ken,
yeah,
I will talk to you. See you, everybody.
Thanks,
everyone.
Thanks,
See
Ken.
everyone later. Bye, everyone.
Bye.
Bye.